Now is Key Advisors Wealth Management CEO Eddie Ghabour. Also with us is Kenny Polcari today. Eddie, good to see you. Thank you for joining the conversation this morning. And Ken, I want to begin with you and look at this market that is selling off this morning. We got the Dow Industrials down about 300, and the Nasdaq also down 300 right now. S&P lower by 65. One day after a huge rally on Friday, investors were real positive on Friday over the U.S.-China trade deal, the 90-day pause for China with the tariffs going lower, President Trump's record investment tour in the Middle East, where he came back home from Saudi, Qatar, and United Arab Emirates with trillions of new deals. The Trump administration says it's planning to send letters to more than 150 countries now, detailing what they should be paying to do business with the United States. Of course, we're expecting more trade deals. While the president was in Saudi and Abu Dhabi, he said, in a very matter-of-fact way, he said, look, India is ready to drop the tariffs to zero right now. So perhaps India is going to be another deal that we hear. We know that the trade minister is in Washington this week from India. But then there's Walmart warning customers that it might hike prices over tariffs. President Trump responded to that on Truth Social, saying Walmart should stop trying to blame tariffs as the reason for raising prices throughout the chain. Walmart made billions of dollars last year, far more than expected. Between Walmart and China, they should, as is said, quote, eat the tariffs and not charge valued customers anything. Meanwhile, today is J.P. Morgan's 2025 Investor Day. The financial giant touting more than $4 trillion in assets as of last June. The meeting could also serve as an impromptu audition for Jamie Dimon's potential successors. They're all going to be there. Marianne Lake, Doug Patino, as well as Troy Rohrbaugh is there. Kenny, who do you think succeeds Jamie Dimon? What are your thoughts on the stock here?
Well, listen, I love J.P. Morgan. I own it. We own it. I've owned it for a long time. I think Jamie Dimon has done a fantastic job. Now, who's going to step into his position? It's going to be a very, very interesting conversation. We'll see how that plays out. You know, we'll see as these people present themselves, what the market thinks of them, what the analyst thinks of them, what the speculation might be. I'm not sure which one I think should step into the game, although I'm very, very interested because I think that's going to define what happens at J.P. Morgan going forward, right? Will they follow in Jamie's steps? Will they use his same kind of leadership skills? Or are they going to bring a whole new skill set to the game? And then how does that change J.P. Morgan, if it does at all?
Well, what about the growth story of J.P. Morgan? I mean, putting you know, showcasing successors aside, you know, the company has been doing incredibly well above others. So
100%.
Would you buy this stock right now?
I would buy this. I own the stock. We own the stock. I would buy I would buy J.P. Morgan on a pullback. I don't like chasing things. You know, I don't chase them as they go higher. Yeah. But on a pullback, I would always like to add to those key names, and J.P. Morgan is one of them.
Yeah, but I mean, look, obviously the financials are getting impacted, Eddie, if we have this downgrading of U.S. credit. I mean, Moody's downgraded the U.S. credit rating by one notch, now going to AA1 from AAA. This over what Moody's is calling the annual fiscal deficits, growing interest expense. Don't forget, we're waiting for Treasury Secretary Scott Bessent to tell us exactly when the so-called X date is. That's when the government runs out of money. It's in the August-September period. And the key reason that the lawmakers need to get the big, beautiful bill over the finish line by July 4th, because as part of the bill, it's raising the debt ceiling by $5 trillion. Here's the Treasury Secretary over the weekend reacting to the Moody's news. Watch.
First of all, I think that Moody's is a lagging indicator. I think that's what everyone thinks of credit agencies. And we didn't get here in the past 100 days. It's the Biden administration and the spending that we have seen over the past 4 years. You know, we inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
I think this is a really important point, Eddie. We did not get here in the first 100 days of this administration.
That's exactly right. And that's why I find the timing of this very odd. They wait and watch the deficit explode to $37 trillion, and then all of a sudden they want to give us a downgrade. I think the market looks right through this. The most important thing from a market perspective, and it's pricing it in. What's interesting on the bond side is we've seen a breakout in bond yields over the last 3 weeks on the 10-year Treasury, and we think that's because the market is starting to price in a reacceleration of growth on the economy. And I think you're going to see that with all this money pouring into the U.S., with the worst behind us on tariffs, deals coming in, to your point. I think these dips are going to be bought aggressively because so many people are underinvested, expecting a recession, and I don't see it. So to me, this is nothing but a gift to be able to buy this morning, and we will continue to buy dips because we think that the bond market is actually signaling the economy is getting stronger. So we're looking at this rise in yields as a positive sign, as well as looking at the direction. It can't go straight to 5. I think we'll probably top out here and just really stay range bound.
Well, how important will this bill be this week? I mean, I suspect the markets are going to be watching every move with this bill to get it out of the House by Memorial Day. The May 22nd remains the goal for passage. You know, let's face it, they're not going to wait until Memorial Day. You know, they leave for their Memorial Day holiday on the 22nd. So, Kenny, what do you think? Think it gets there? I mean, that's what the markets will focus on all week this week.
I think you're absolutely right. And I think it does get there. And the markets are focusing on that. The markets will be disappointed if it doesn't get there, right? But I think that's adding to some of the angst this morning on top of this downgrade, which I think is Eddie. I think, like Eddie, the market will look through it. But I think it's that headline that's just going to cause that pullback today. And maybe we need a pullback. We've had this straight up rally over the last couple of days, so it needs to pull back and digest it. So I'm not thinking this is the end by any stretch. But yes, the market is going to want to see that deal done and move on by this weekend.
Well, it's a big day as well. You've got the Trade Minister of India in Washington, Eddie. So we'll see if India's next after the UK-US deal and the temporary deal with China. Don't forget, President Trump will speak with Vladimir Putin today, 10 a.m.
Yes, look, all the stars are aligning that when you look at the data that's coming in and the news that's going to come in on trade, you have to put the probability higher on the fact that there's going to be more positive news than negative news. And so, again, when you get days like today, if you're underinvested, I think you need to look at them as opportunities to get back in, because many people have missed this rally. To Kenny's point, it's gone straight up. To me, this is nothing more than just an overbought market that's getting selling off a little bit, and that's healthy, and that's okay.
Yeah, but let me just point out that both the S&P and Fitch both have the U.S. credit rating at AA+. Right. Okay, so that's where Moody's went. So Moody's just got in line with what S&P and Fitch have already done. Eddie, good to see you. Thank you.